Recently, in an interview on CNBC, Ray Dalio came out saying that cash is trash in 2020 and going forward. And Dalio advised that the one thing that people should not jump into is cash. So these are some of the things that he said. Cash is trash, he said. Get out of cash. There's still a lot of money in cash. He explained that the depreciation of the exchange rate and that the printing of money over the next few years is going to be the biggest thing. Cash is not going to be good. So there are three key things that I want to go over in this video. The first thing we obviously need to do is simply explain what Dalio means when he says cash. Secondly, I'll explain and show you why Dalio believes that cash is trash, and I'll explain what you can do. If not cash, where does Ray Dalio recommend we put our money? So the very first question that we need to ask ourselves is, what exactly does Dalio mean when he says cash? Does he purely mean cash that we have in our wallets, the physical piece of paper? No, he doesn't. Cash is simply what's known as ready money. So this includes money in the bank, the physical cash notes you hold, but it also includes assets that can be converted to cash within 3 to 6 months. So treasury bills is considered cash because that can be converted to money within a short period of time. That's what Warren Buffett owns. Treasury bills, aka cash. So just note that down, guys, that when we are talking about cash, we're not just talking about physical cash notes, but also liquid assets. The very first thing that you need to know about cash is, over the long term, it's always going to get destroyed. So this is a graph that dates all the way back to 1913. And what this graph is depicting is the purchasing power of $100 back in the day. As you can see from the very start, it's been on a downward trend. As time goes along, your dollar becomes worth less and less. It took about 30 years for that $100 to become worth half of what it was at the start. And today, that $100, almost 100 years later, is worth pittance. Less than $1. So that is why I implore all of you who do want to own cash, make sure that that cash is a cash equivalent that is earning interest or in treasury bills, just like Warren Buffett. So, over the long term, I think that we can all agree on that cash is not a good asset to own because it's going to go down in value in the future. But why is it particularly bad in 2020 and going forward? That's a good question. The first thing you need to be particularly aware of is that the stock market has a tendency, or a noted pattern, that it crashes around every 10 years. That's what we see when we look throughout history. Now, how long has it been since our last market crash, which was in 2008 to 2009? Well, it's been over 10 years, which may mean that we are due for a recession in the upcoming couple of years. At the end of the day, a recession will always come. The question is not if, it is when. So, as of right now, we obviously are not in a recession, but still, the government is printing money and lowering interest rates, as you can see. Now just imagine how bad things will be if a recession were to come. The government would be printing way more money and lowering interest rates more. They're doing it now, and we're not even in a recession. We're in a bull market. So now the question becomes, why is printing money and lowering interest rates bad for the owners/holders of cash? Well, printing money, I'll give a basic example. Let's say you've got 10 people in a town, they've each got $1, and they all want to buy food. The food's price is depending on the demand and amount of money people are willing to pay for it. Then, let's just say some outside force were to print money and everyone got an extra $1, they would be willing to pay more for food because they got more money in the system. and the price of things would go up, aka inflation. But that $1 that you originally had would be worth less and be able to buy less than what it would originally have been able to buy. So, when the Fed prints more money, which they're currently doing, it's bad for those who own cash because their dollar becomes worth less. Also, if the Fed were to lower interest rates, which is what they do in recessions to spark up the economy, it means your cash equivalents do not yield as much interest as they did before, which is another thing not good for cash holders. Now this clearly leads on to the question, what do we do with all of our money if cash is not a good option? First, Dalio recommends a well-diversified global portfolio. This means you do not have all of your stocks in the USA, but you spread your risk throughout other countries, the likes of China, Europe, and of course emerging markets. You know, Ray Dalio's largest equity position is the S&P 500 ETF, so that's 500 large companies in the USA. This comes in at 18.4% of his portfolio. His second largest position is the Vanguard FTSE Emerging Markets ETF, which invests in companies around the world, the likes of China, Brazil, Taiwan, and South Africa. Even his third largest equity position is in something called the iShares Core MSCI Emerging Markets ETF. In this ETF, it says, is used at the core of a portfolio to diversify internationally and seek long-term growth. So that's the first thing that you can do. It's to look at the equities not only in the USA, but globally. The next thing that Dalio mentioned is that you have to balance your portfolio. What he means by this is balance it through equities / stocks and also bonds as well. You know, Dalio's all-weather portfolio has 55% of it in bonds. Now, if I'm honest with you, this isn't really my cup of tea. I personally don't want to have my money locked away in bonds for a long period of time at a low interest rate, but it's not about me, it's about Dalio. But the one thing that I gotta say I do like about Dalio is the amount that he has in gold. And this is the third strategy that you can deploy when it comes to investing, and that is have a certain percentage of your portfolio in gold. Ray Dalio says, those assets that will most likely do the best will be those that do well when the value of money is being depreciated and domestic and international conflicts are significant, such as gold. Additionally, for reasons I will explain in the near future, most investors are underweighted in such assets, meaning that if they just wanted to have a better balanced portfolio to reduce risk, they would have more of this sort of asset. For this reason, I believe that it would be both risk reducing and return enhancing to consider adding gold to one's portfolio. So, Dalio's all-weather portfolio recommends about 7.5% of it to be in gold. And the main way that Dalio uses to expose his portfolio to gold is through an ETF called the SPDR Gold Trust, ticker symbol GLD. GLD, as it says here, tracks the gold spot price, less expenses and liabilities, using gold bars held in London vaults. GLD is actually the largest ETF to invest directly in physical gold and has an extremely close relationship with spot prices. So, those are the three key things recommended by Dalio to look deeper into when thinking about where to put your cash. Now we also need to think about this. The world's greatest investor, Warren Buffett, currently has $128 billion worth of cash on him at the moment, treasury bills. So the interesting thing about Warren Buffett is he actually thinks similar to Dalio, and he also knows that cash, generally speaking, is trash. But Buffett has a strategy. He is patient, and what he does is he waits for opportunities. So that when the stock market does crash and the Fed starts printing money and the cash value goes down, That's when Buffett likes to invest this cash in the stock market. When stocks are going down, people are panicking, and things are cheap. So that is key. If you do want to hold cash, you must make sure that you start deploying this cash when stocks go down. You know, I do a bit of Warren Buffett and Ray Dalio. Just like Ray Dalio, I own gold, but I also own a fair amount of cash as well, like Warren Buffett. And when the crash does come, I can tell you I'll be snapping up a lot of stocks. And the type of stocks that I'll be purchasing is long-term quality companies selling at a discount with quality managers in place and stocks that I can understand, similar to the ones that Sven Carlin is buying. And of course you can see his portfolio in the link below, and he's also got a free course which I'll leave in the link below as well. But you know, Ray Dalio, he does not like the Warren Buffett strategy. He thinks cash is trash, which it actually is, especially over the long term. And he prefers to own a mix between stocks, bonds, gold, and commodities. This is a safe, secure strategy to use.